Video. Had a little bit of sound problems, but now we cleared that up. So I wanted to send you a video. This is called My Favorite Small Cap to Buy Right Now. Again, I know it's a headline grabber, but this is a name that's under the radar. For example, today, what are we talking about? We're talking about Intel's quarter, which was bad. It's down. Seagate, Mattel, Boston Beer. Forget about those names. This is a much, much better name you should be focusing on, a name that has tremendous upside potential, and it's a name that's off the radar. The name of this company is Triton International, okay? TRTN, this is one of the largest rental container fleet companies in the world, okay? So if you're looking at the chart, which I like a lot, it's up a lot. You see it coming back. More of a rebound in the economy play. Yes, it came down. We saw the market come down a little bit here, and now they just reported earnings. It was up about 2-3% today. The market's starting to sell off, but it's a fantastic, fantastic buying opportunity. It's a name that we're already up about 15% on. It's a much bigger buy now after this quarter, and here's why. Okay, so the research that I'm doing on this company, this is from the transcripts, right? After every quarter, companies report, the transcripts, you get to listen to this. It's a conference call. Right at the beginning, look what this company said right here. Strong upward inflection on performance supported by a sharp rebound in global trade. The magnitude of this rebound was generally not anticipated, so it caught them by surprise. Our customers have needed to quickly add large numbers of containers to their fleets, which is great news for this company. Provide sizable immediate solutions to our customers. Over here, our strong support we provide during the surge will further solidify our position as the go-to container leasing company for the world's largest shipping lines. These guys deal with the biggest companies in the world. This is what I love here now. We're heading to the end of the year with substantial operating financial momentum. Our customers expect container shortages to last at least through early next year, and we expect our profitability to increase in the range of 25% over the next 2 quarters. And you know the company's not BSing. You know why? Because they're increasing their dividend almost 10%. So they already pay a 5% yield. They're increasing their yield, this company, by 10%. Yet they're growing earnings at 25%, which is about 4 to 5 times faster than the overall market. When we look at, and I'm going to bring up Yahoo Finance this way you guys can follow along here, 25 times growth, and we're looking at a company trading at 7 times forward earnings with a 5% yield. Bring in my paid site here, Capital IQ. If you're looking at earnings, all right, 2019 right here, 457, even like 278 in 2017. 18, 19 were great because Trump's taxes and things like that. A lot of companies reported much stronger earnings. But we saw a little bit of a pullback, right? The whole economy shut down, the world economy. Look at these numbers now, right? So we're seeing a company that has tremendous, tremendous growth. And if you look at the ports, almost all, Los Angeles, all on the coastlines, reporting record numbers. If you ordered anything recently, I ordered golf clubs. I haven't ordered golf clubs in 7 years. I ordered them 3 months ago. I haven't got them yet. There's massive demand. We're heading into the holiday season. They need to get these things shipped, especially from overseas. And Triton is one of the biggest beneficiaries. We've been focusing on small caps. It has a $2.5 billion market cap. It pays a 5% yield. That yield is going to be 2.5% in 18 months because the stock's going to double by then. You're seeing massive growth. They're being very conservative with their numbers. I don't blame them. But this is another small cap. You have to focus on small caps, even value cyclical plays that have gotten crushed because of COVID. COVID's going away. We can all argue the timing. But I just traveled airports just this week, a couple days ago, and they're about 50-60% capacity compared to 15-20% 3 months prior. So we're seeing more people go out. We're seeing the economies open. We're going to see a lot of stuff after the election go away to the point where people are going to be okay. Right? 99% of people survived due to COVID, but the economies are opening up. There's a lot of companies, even hotels, casinos, that have been decimated, still down 20-30% off their highs. This is a name that makes sense. It's growing much faster than the overall market. You don't have a lot of downside risk here. They're right in the sweet spot. Again, huge demand from all their customers that they're seeing. They raise their dividend. You get a 5% yield. Even if I'm wrong on this, big deal. After a year, you get 5% compared to putting your money in the bank earning 0, right? Or anything else that's earning 0 interest rates. Again, I think this year is going to be 2.5%. 18 months is going to be a double. This is a name you have to keep on your list. These are the names I find in Curzio Venture Opportunities, our portfolio Curzio Research. You can go to CurzioResearch.com to see it. Our last pick, guys. Again, I've been pushing this newsletter for a reason. I'm not going to push unless I think you can make money on it. Our last pick's up 70% a month. I'm seeing this with a lot of small caps that nobody's talking about on TV. It's an area I've covered for over 2 decades. I'm going to try to make you money here. There's just so many ideas, more ideas than I've seen probably since the bottom of the credit crisis right now in small caps. You got to stay focused. Focus on these names. Forget about the intel. Forget about those big stories. These are the names that are going to generate a fortune for you, and it's not going to take long. I'm Frank Curzio. As always, I'll come back to you guys soon. Take it easy.